Welcome back. It's time now for On the Radar, where we ask an investing professional what they're looking at in today's markets. We're back again with Brooke Thackray. He's at Horizons ETF Management Canada to talk about the uranium sector and some opportunities you see there. As we just told viewers, during August, the uranium stocks did well, and they are part, we have to remind ourselves sometimes, they are a big part of the energy index on the S&P TSX Composite. It's not just oil and gas producers, the uranium producers are there as well.
Yeah. So uranium has been doing extremely well, and that's because you're seeing more and more countries making announcements around using nuclear energy. And there's a resistance for this for a long time, but now we're starting to see that really increase, and it's getting a lot of headlines, which is really helping to push up the price of uranium. And so we're seeing that slowly rise. But there's also a seasonal factor as well. And this is the graph of uranium right now. And you can see here, this is just on a monthly basis from the Federal Reserve. So it's a little bit different than the spot price, but it shows you the overall trend. And you can see 2011, that was Fukushima in Japan, where you had the nuclear accident. But also, if we go back further, and we go back to the early 2000s there, and you can see the spike that took place in 2007. That was a huge spike. That was it shows you the potential that can happen. And we've sort of forgotten all that, but we had some floods in mines back then. We had some restrictions, and commodities were doing really well. And well, even last week we saw Chemical talk about its reduced production starting to take place. So there's some potential there. Also, from a seasonal basis, if you're looking for a catalyst that usually triggers uranium to do well, although it's done well here now, is the World Nuclear Association has their conference this week. And the uranium and uranium stocks tend to do well after that.
Interesting.
Because that's when they basically talk about all the trends that are taking place in the market. There's a lot of excitement that goes into that.
And I think that's important because the uranium market is a more difficult market to track, I think, than is the oil market, which is so liquid and you get data every day on the price of oil. The uranium market is very much different. It's less liquid and a little bit mysterious, I think, to outsiders.
Yeah, because, here you have the demand can just all of a sudden come at once or not, not really change very much. And the supply as well can be, online at one flat level. So it's very, very different as far as that goes, as far as the liquidity goes. But we are in a spot right now where we've seen uranium perform well. And it's not, that was a graph of uranium, but that's uranium stocks or uranium ETFs also tend to benefit at this time.
We could take a look at some of those. Cameco, of course, is the big one, CCO. On the TSX, the biggest uranium producer in the world. It's done well so far this year. Denison Mines is a smaller name that gets a lot of interest at times in Canada. There's Cameco, year-to-date performance, better than 65%, strong upward trend since the spring of this year. Denison is coming next. There's Denison. It's up 24% so far this year. And there's a Horizons, I believe there's a Horizons uranium ETF that we are going to take a look at as well. There's the ticker symbol HURA. That one is up nearly 30% so far this year.
Yeah, well, this is benefiting from all the news that we've seen and the rising uranium price on that. So, for full disclosure, I do work for Horizons on that. That's an ETF that holds a number of stocks and also a little bit of the Sprott physical product as well in there. But we're just seeing the stocks benefit. So it's not just the uranium pound price that's been going up, but there's been a lot of excitement that's going on to that with companies being able to take advantage of the situation. And we just see this flood of announcements coming in, country after country, saying, okay, we're going back to using nuclear power. We're increasing our nuclear power. Well, even Ontario, look what's happening in Ontario. It'll be quite a few years before all this takes place, but this will all benefit.
And it's quite a few years in all these countries that make these announcements because it takes a long time to build a nuclear facility. But there is a lot of talk as well about small modular nuclear reactors, correct? And they are, as the name implies, they are much smaller than the typical reactor.
Yeah, so SMR, small modular reactors, are a different type of solution. Instead of having a big, huge Bruce nuclear facility or Pickering, it's a much smaller facility. And those can be brought online quicker. They're not the same build that's taken place. You can put them in different places as well. So there's some applications. So that's really a new use for nuclear. So nuclear overall, but you can use it in places where you couldn't use the big application before. So that should also help drive demand over time. And as I said as well, those products can come online a little bit faster once they really get going.
Brooke, it's been great.